Let's have a situational awareness as to what is really happening in the market and how you can like position yourself or what kind of things are working in the market. Now this market has been going down since November, and the backdrop to every market correction, trying to understand a backdrop to every market correction is what is really situational awareness, because that tells you how you can be aggressive or less aggressive or which side of the trade is working. And in order to do that, the underlying buying or selling pressure is what I measure. So for me, the underlying buying and selling pressure I measure through market monitor. Now in market monitor, what I am every day looking at is whether there's buying coming into the market or selling coming into the market. So as you can see, how will you know in November itself that the market was about to turn and was going to go down? Is if you look at the period here, you will see that we were in a bullish market. This particular indicator is what I call primary indicator, and which is the number of stocks which are up 25% plus in a quarter and number of stocks down 25% in a quarter, which tells you that the money flowing into a market on a slightly longer duration like a quarterly basis. Now if you see, in November is when this particular day of November is when the indicator turned negative, 19th of November. So if you see from 19th of November, the SPY hasn't really made much of a progress, right? And if you see this particular thing around 19th of November is when it turned negative, and since then we have been having trouble going up, right? And the 19th onward, and the market has been down since then. So by avoiding the bearish period or recognizing that the market has turned bearish, you could play differently from what you were playing earlier. Now there is again another backdrop which you need to see to a market, and which is what determined, or like on the member side many months ago at the beginning of this bearish market, I made a video saying that this is likely to be a duration bearish market. This is not likely to be a short-term bearish market. And why did I say that it was likely to be a duration bearish market and not short-term bearish market? There are reasons for that, and one of the reasons was also, in addition to this information, this particular spreadsheet monitors extreme bullishness or bearishness in the market. And as you can see, right, there is a parameter which I monitor, which is the common stock universe, or how many stocks are trading in the market. And there were like around 7,000 stocks which were trading in the market, right? Or 6,900 or 7,000 started trading in 2021. But if you go back and see the year before that, if you see 2019, 2018, you had only 5,000 stocks trading in the market. So there was almost 2,000 more stocks which came into the market. Now if you see these figures, you will see that this is more or less a very constant figure, or it has been like around 5,000 for many years. It fluctuates a little bit because IPOs come in, some stocks get bought out and things like that. So this is like 5,000, right? 2018, you're looking at around 4,900. 2017, you're looking at around 4,800. So you're looking at like 4,900. And so if you keep like looking at it, the trend has been like basically very, very similar, that you are going to have similar kind of figures of around 5,000 or 6,000 here, but like 5,000 more or less. And then suddenly the figure went and jumped a lot in a short period of time. So that was one of the input, which was the reason why I made a call in the beginning of this bearish market that we are likely to have a duration bearish market. Because when you are saying that there was a bubble, how do you know there is a bubble? Because there are a lot of IPOs which came in the last 1 year. There are a lot of very speculative IPOs like SPACs which came in. There are a lot of bubblish kind of an environment which was created post-COVID, where you had retail traders dominating volume. There were days when retail traders' volume was higher than the volume of institutions. That's a sign of a bubble. Now, similar things have happened in the past, in 1998, 1999 kind of a period, and where similar things have happened. So study of historical things which we have done shows that whenever the number of stocks trading in the market dramatically increases in a short period of time, then what happens is it is followed by a duration kind of a correction where the excesses of the market are corrected. And this is what has been happening since this particular period. The market has been having these few weeks rallies and all, but like it hasn't really had the ability to put together a sustained period. Now, duration bearish market is what we are currently operating. It is already a 9 months, 10 months kind of a market where we are looking at like it might last for even couple of more months or even longer, because duration bearish market in the market, this is not a duration bearish market because it hardly lasted for a few weeks, or where you get like these kind of periods where the market takes a longer time to recover. This is another example of a duration bearish market. So based on the historical pattern studies in the number of stocks which are trading, the trading environment, you can remember like there was so much bullish bubble in cryptocurrencies, in NFTs, in Rolex watches and housing, everything. So it takes time for these kind of things to correct. So from a longer term perspective or from a situational awareness, I have been operating with a background that this is likely to be a duration correction which is going to last for a longer time than a typical correction, right? In a duration correction, if you see, and I started trading around 2000, so I've seen the 2001, 2002 bearish market, I've seen the longer 2008, 2009 bearish market, and I studied that intensely and gone back in history and studied these kind of markets. You will see that there are from time to time very sharp rallies. There are sharp rallies. This was a 14% rally. But that doesn't change the direction of the stock. So from a situational awareness point of view, I am operating with the understanding that this is likely to be a duration kind of a market which might last anywhere between 10 to 18 months, because that's the typical duration market, bearish market. So as a result of this, tactically, you have to look at if there is a buying coming into the market at that time. I was long during this time, but like in the last couple of days, like for last 6 or 7 days, I've been only short, because you can see that the money is coming out of the market and shorts are working here. Shorts are working very well here. So this is my situational awareness based on short-term money flow. For this to change to becoming aggressively bullish, I need to see a lot of buying coming in, like you see here. 800 and 1000 day, right? And there was a 933 day, then followed by 1000 day to the downside, 700, 800, 600 kind of day. If you see a lot of buying, 600, 700, 1000 day, like you had like this buying which come in 1000, right? The ideal situation would be if you can see a buying coming in rows, which you can see in 2009 when the market bottom. That is the kind of action which will make me really bullish about this market. If you see in 2008, 2009 when the market turned in March, right? March of 10th is when the market put in a bottom for 2009, and you see 1700 stocks were up, and that was followed by 1300 stocks. That was immediately followed by a few weeks of 1300 stocks, 1500 stocks, 1500. So there were like so much buying coming in rows, and that is what is going to indicate a turn in the market. So within this short-term bearish, like bullish phases are going to be there during this duration bearish market. There are going to be periods when you are going to have like 2 weeks, 3 weeks rallies, but a real turn will happen when you get real breadth where in a short period of time you get series of 1000+ days, back to back 1000+ days, and then a buying herd comes in. That is when this market will be a good market for longer term kind of a trader. For short term traders, obviously you have to target, like in the last couple of days I've been having shorts, and most of the shorts have worked. Why have they worked is because the market itself was losing money, and that is how you can use situational awareness to calibrate your trading and focus on either longs or short based on what monies are flowing into the market. And once you apply this kind of a filter to your trading, you will have less frustration and you will have less drawdowns, because you know what is likely to happen. And also, those of you who are interested, go back and historically study the number of stocks which are trading in the market and see their correlation. Whenever it jumps dramatically in a short period of time, you will see that is the Prodi period. Like you had a lot of IPOs coming in 98, 99 period. Almost like this figure went about 10,000 during that time period. and then that was followed by a duration bearish market for many years. Then the IPOs were around 5,000, 6,000 kind of a thing, and then suddenly, or like prior to this, we were at around 5,000, and suddenly you had 2,000 more companies, which is a huge increase in number of companies trading, which tells you there is a frothiness. Whenever there is frothiness, wherever there is a bubble, whenever Rolex prices are going up, or NFT of monkey is being bought for 2.5 million, it is more likely that you are going to have a duration bearish market.